Discover how to reclaim hidden money and transform your financial future.
Meeting tonight, and thank you for giving us a few minutes of your time to talk about this subject that has affected so many people in so many ways. That is this thing called money, and where is it? I think all of us have, at some point of our lives, we've lost something. And when we found what we lost, after looking for 10 minutes, or sometimes for an hour, we're just overjoyed. The other day I was leaving, going to somewhere, and I got to the corner and I discovered I didn't have my driver's license. I didn't have this little clip with everything in it right here. And so I turned around and I looked in my office here at home, looked in the bedroom, went to the bathroom, and I couldn't find it. I said, well, I just got to go. I find it somewhere. And I got in the car, and there it was on the seat, had fallen out of my pocket. I was overjoyed. I was happy because I found what I lost. Tonight, we're going to talk about another thing that we've lost around the country. So many people that are looking for ways to make things better, to improve their quality of life, and they simply don't know how to get it done. And I hope y'all, if y'all can't hear me, please let me know. Send me a text, send me a chat or something. If you can't hear me, let me know. So hopefully you can hear me. If you can't, send me a text and I'll see it here on my phone. So sometimes I've done a meeting and got all the way into the meeting and they said, I can't hear you. I can only hear me, but you can hear me. So I ain't got a text yet. So hopefully you can hear me pretty good. Hey, again, thank you so much. And on behalf of Bessie Cooper Harris, good. Thank you, Bess. I see you can hear me. Okay, great. The other vice president, thank you for plugging in tonight. My name is Ricky Pitts, and I'll be your host for tonight. We're going to go ahead and go right through this, how money works. So the question is, where's the money? And sometimes it can be hiding in just plain sight, like a tax refund. And what did I do with that tax refund? Or like overpaying for life insurance, overpaying for car and home insurance, or having magazines and subscriptions that we never even read. Where's the money going? And then sometimes this other statement is also important. Are you finding more money in your household budget due to factors like these 6 boxes or cubes on the right? And somebody might say, Rick, and none of that applies to me. Inflation is still high for me. I didn't get a wage increase on my job. But we're going to look at some other ways and means that you can probably find money in your home as well. You see, what we do, we help families find money in the budget to take care of 2 key words: financial priorities. And what was a priority for me a few years ago when I was much younger is not a priority now. So my priorities now have totally shifted because we're looking for making sure we have a good retirement and all the things we want to have in the golden years. So what was important to spend money on is not the same anymore. Let's take a look at this life insurance real quick here. And I'm going to look at the top heading and the bottom heading. Are you overpaying for life insurance? On the bottom, find your money. What's the option? Buy term and invest the difference. I'm going to spend a little time on that concept of buy term and invest the difference. Now, right now, I'm just going to identify the 2 types. Is cash value or whole life or term life? Those are the 2 kind of policies in the marketplace today. All kind of names, but when you cut it all down, those are the 2. Now, there are 4 problems here with cash value life insurance. I'm going to identify 1, and we'll look at the other 3 in the presentation. 1 is it expensive? It is an expensive form of life insurance and typically provides less coverage for the family. That's a fact. And we want to make sure that when we leave here, that our family is okay. And the way to get that done is a certain concept that we're going to take a look at. Now, I want to ask you a question. Which program would you want? As a young couple, we call them John and Mary. They got $250,000 each, and they're paying $251 per month. And the agent told them, if you keep paying this every month, Just don't stop. Don't miss a month. By the time you're 65 years old, you have over $127,000. Now you have to get that money out. You have to borrow at a lower rate than you would pay at a bank. You're borrowing out your own money, I understand. And your policy is going to be the collateral or the sole security for the loan. The Index Universal Life is a little tricky. They got two programs, Plan A and Plan B. Plan B tends to give you a little bit more of your savings back at death, but it costs more. So you're not getting anything extra for free, you're paying for it. Well, let's look at that same $251 a month. And you tell us if this makes more sense. Same coverage, John and Mary, same $250,000 each. But what they're paying for that $250,000 of life insurance is $88 a month. That's $163 a month less than what they were paying on the other side. They're going to take that $163, put that in a Roth IRA at a reasonable rate of return, 9% over that period of time, 30 years, is very reasonable. But at the end, at 65 years old, they got $300,000 in their investment account. At the end of 30 years, it's going to go up. The insurance is going to go up because they're 65 years old. That's just kind of logical. But the question is, do they need it now because they have $300,000 in cash? If they elect to renew it, and they can, it is guaranteed renewable. At death, at that point, the family gets the $300,000 and the $250,000, $550,000. The insurance and the savings, and they don't have to borrow the money out, they just take it out. Let's talk about savings and investing. Those two are very different. But the question here is your money working for you? Do you have money in a bank account, paying next to nothing, averaging 0.61? Do you have money sitting in a 401k that's kind of forgotten? Do you have money in an IRA where there's no contributions going in, it's not working for you? What we're saying here tonight, ladies and gentlemen, let's take a look at it. Because every day we're getting closer to a time to not have to work anymore or to have the option. But there are things we have to do intentionally. There's something called the 3-account system that almost everybody really needs. One is an emergency fund. Why? We never know when an emergency can arise. Air conditioning goes out in the middle of the summer, it's going to be some problems. That's an emergency. Short-term savings, a down payment on the house, down payment on the car. That's a short term, 2, 3, 4 years. But that long-term savings, that long-term investments, we've got to make sure that when that time comes, we can retire with a certain degree of dignity. How do we do it? One way is to bypass the middleman and become an owner and not a loaner. You see, on the left side, you see where it says your money. In the middle, we see the banks, credit unions, insurance companies. On the far right is the global economy. What we're saying is, let's take our money and bypass the middleman and put our money where the banks are putting theirs. One way of doing that, one simple way of doing that, is in mutual funds. Been around since the 1920s and 30s, and they provide a way whereby investors can pool their resources under the management of professionals. Why? The average person does not have the time, does not have the ability or the expertise to know who to invest in, who not to invest in. Mutual funds have a full-time commitment, a professional portfolio manager. This is all they do. Let's talk about the power of tax-deferred savings. And here's the point I want to make on the bottom here. Find your money option. Reduce taxes and keep more of your money. Uncle Sam gets enough as it is. Let's talk about this tax-deferred, the power of tax-deferred savings. You got 10 years, 20 years, 30 years, and 40 years. I'm going to zero in on the 20 years. Now, some of y'all are real young, 20 years old, 25 years old. You look at the 40 years, okay? And that's on down the road. But in 20 years here, you got three people putting aside $500 a month. And in 20 years, the first one is going to have $206,000. You know why? Because they're paying taxes every year on their earnings. They have no tax shelter at all. And every year they get a 1099, paying taxes on the earning. Number two, they're not paying any taxes on the earnings at all. Those taxes are deferred all the way up into retirement. Let's just call that a Roth IRA. And let's call the Roth IRA, which is the way it works. When you take the money out, you pay no taxes and no penalties. Think about that one. If you don't touch that money for the first 5 years, it then qualifies the person at retirement north of 59 and a half to take out every dime, pay no taxes, pay no penalties, tax exempt. The third one, let's call that a 401k, 403b, 457, TSP. The money is going in as a deduction. So whatever they put in brings down their adjusted gross income, not paying any taxes on that. And what they earn, the return also grows tax deferred until distribution. Now, when they take it out, Uncle Sam is going to say, come and see me, because they're going to pay taxes at that point. But look at the differences: 206, 262, and 336. Ladies and gentlemen, this is the truth. People are destroyed for the lack of knowledge. Let's look at another one. So the question then becomes, which IRA do you prefer? There's a traditional IRA where it was deductible. There's a traditional IRA where it's non-deductible. There's a Roth IRA, which is pretty much the favorite choice of a great majority. But what stops us from putting money back? This thing called debt. It's a trap. Credit cards, short-term, buy now, pay later, and then compound interest becomes our enemy as opposed to being our friend, because it's on the other side of the debt side, and money just can disappear. Now, here's the bad news about compounding. You got a person here that had a credit card and they spent $3,000 at one time. It could have been on a riding mower, could have been on a computer. And they got an 18% interest on that credit card. They're making the minimum payments. It's going to take them 10 years to pay it off. They're going to pay $2,002 in interest alone. That's going to be $5,002 that they paid for this computer or this riding mower or whatever it may have been. That's $2,000 that we just gave away in interest. Am I saying it's impossible to avoid interest? No. But we got to do all we can to mitigate, to not pay as much as we look toward retirement. Let's look at Plan A here in a debt stacking system. What you see on the screen, they got 1, 2, 3, 4, 5 debt obligations. You see the monthly payments out to the side, and you see the total payment of $27.20 per month. Now, if they stick with Plan A, it's going to take them a total of 23 years to pay that debt off. They're 35 years old now, so they'll be 58 years old. They're going to pay $214,000, as you see, $214,000 in interest alone. If they, on the other hand, decide we're going to take that $220 when it's paid out, going to add that to credit card number 2, which right now is $353 per month. Going to add that $220 to it and send them $573 per month. We're going to keep, and then you turn around, those top 2 have been eliminated. We're going to keep traveling that road until we get all the way down to the mortgage. Once we've gotten to the mortgage, which is $1,293 per month, at that point, we freed up $1,427 because all the other bills have been paid out, and the $1,427 represents the monthly payment of those other 4. Going to take that $1,427, add all of it to the principal of the mortgage. That's going to pay that house off and all the other debt. Look at this. In 9 years. That's 14 years sooner. Not 58 years old, 44 years old. If they keep putting that money aside, and very few will continue to put that money aside, right? But if they did, that's a total of $2.4 million at 9% at 67 years old in their account. Now, take a look at this. This word called budget is not a real popular word, but it keeps everything together. The question is, do you know where your money is going? I tell you what, this dining out, this gourmet coffee, these subscriptions and these streaming services, 525 TV channels, don't have time to watch them all. It's incredible what we could do when we have to. When I say when we have to, if all of a sudden a person loses a job in the home and that income is gone, we would be amazed at how creative we become when all of a sudden 40, 50, 60, 70, 80, 90, $100,000 just disappeared. What we're saying is let's do it now and let's plan for down the road now. I want to talk to you now about a business opportunity. Now, this might not be for everybody, but we want to encourage you to listen to it for the rest, another few minutes, because it may be that you have, or might be you have a young son or daughter that's sick and tired of the corporate rat race and all the politics that it brings. Looking for a way to generate income as a business entrepreneur. Let's look at this. Want to earn more money. That's almost a yes for almost everybody. By helping families to find their money and going into business for themselves by working with our company. Now, I'm not going to spend a lot of time on our company because, after all, it's 151,500 people all over North America. PRI is a ticker symbol, delivering for families all since 1970s, almost 50 years. You've heard of Primerica. I mean, Time Magazine said this, America's best financial services. That was this year. So I'm not going to bore you with a whole resume, if you will, on Primerica. But getting started, what does it take? You got to have a license. That's $99. What does that? Is that for Primerica? No, that's for your state application. Whatever state you're in, Alabama, Georgia, Mississippi, California, whoever is on this call tonight. Exam fee for what the state requires, a state exam. Processing fee, appointment fee, got to be fingerprinted. That takes care of that. And then on top of that, $25 monthly is a support system. It is outstanding how in the world they give us what they give us in terms of support. And all we put out is $25 a month, by the way, which is a business expense, by the way, is incredible. Cell phone discounts, your own website. They build a website for the representative. Your pictures on the website, compliant, very nice, not tacky. On-demand training, 24 hours a day. You can do any kind of training, anytime, on demand, whenever you get ready. That would cost $105 to build that site in a compliant manner. If you decide I want to go on and get my investment license, I want to set up retirement accounts and college funds and all kind of investment in accounts. Well, there's an investment license. And the company pays for that. That's like almost $1,500. They want you to come in and study. That's the main part, is the sweat equity. And they take care of the majority of everything else. That's incredible. So $124 to, in a real sense, start your own business. Working from home on a part-time basis. Not out in the hustle and bustle, in the traffic, in the wind, in the rain, and all of this. And no, working from home around your time. Now, there are 5 reasons that people get involved in this kind of work. Number one, they just don't like what they do for a living. They don't like their job. They like today is Friday, right? Thursday rather, than tomorrow's going to be Friday. They're feeling good today because tomorrow is going to be the last day of the week. And they got the weekend. Then Sunday afternoon, they start getting nausea and sick. Oh my goodness, they got to go back in Monday morning. Number 2, they want some extra income. This is the group that loves that job, but they just don't make enough income. The third one, they want some financial literacy. I work so hard. I've done so for a long time, but I don't know where my money's going. Every 2 weeks, I get paid. And I'm waiting on the next check 2 weeks, in the next 2 weeks, or once a month with our school teachers. Or you love helping people. Speaking of school teachers, these are some of the most giving people. And then also nurses, and these professions give and give and give and give and give, and sometimes they get no return in terms of income or appreciation. So you love helping people. This is a way to help people and to get paid. The last one, you want to go in business for yourself because you've seen what other folks have done, and you've seen people be very successful with nowhere near your skill. And you say, if they can do it, I know I can do it. One of those 5 reasons, and for some in the room tonight, it might be all 5. It might be 2 or 3. It may be 1 and 4. I don't know. But you know what your reasons are. And it's important then to take your time and evaluate the situation. You see, this company got started, as I mentioned earlier, 50 years ago. They had a main goal to give people a chance to achieve freedom, just a chance. And by building financial independence for other families. And I want to bring out 3 important points here. You don't have to have a 6-figure income to do this or to become a client. You don't have to have a big old fancy job with an expense account and a car and all this. You don't have to have a big inheritance or win the lottery. No, no, no. We have to have a made-up mind, a heart that's fixed. We have to be sick and tired of being sick and tired of playing politics and playing games on these jobs that they play. We're tired of that. You see, I want you to think about this. Find your money by earning more money. Ladies and gentlemen, we have some choices tonight. We have choices in our life. One is to keep the job in the next 5 years. Not for everybody, but the next 5 years could be just like the last 5. And I want you to think about the last 5 years and how was it? It was either good or it wasn't good. And listen to this. It's important to be humble enough to admit whatever it was, good or not so good. It is. We got to be true to ourselves. Or we can keep our job and do something part-time to generate more income. Or make a complete career change by building a business. When I say building a business, we got people right now that work part-time and all they want is $1,000 a month part-time. All they want is $500 a month part-time. What they want is $3,000 a month part-time, working from home, effectively 10 to 15 hours a week. And I'm not exaggerating here, because you're working from home on your computer, seeing people that want to make a difference, that has the ability to say yes. That's what it boils down to. And ladies and gentlemen, you have what it takes to win. There's nothing to stop you tonight. Nothing but the man or woman in the mirror. You see, the representative that brought you out tonight would like to help to find that extra money, those found dollars, and put those dollars to work for you in a real tangible way. What we talked about tonight is real. This is not just a little play, something to just kind of put my toe in the water, see how I like it. This is real. And if you're looking to really make a real big difference, not just in your life, in the lives of your friends and family. And when I say friends and family, all that we're connected to. Most on this call tonight is because you're connected to churches or church. You're connected to school. You're connected to community. You're connected to a lot of different things of people that you love and care for. And you want to be able to do something that where you can come home and feel good about what you've done because you made a difference. Not just a transaction, not just making a little extra money on the side, but made a difference. And part of the reward, the reaping for the sowing is compensation, it's education, it's motivation. It's a way to take our life to another level. Is it going to be easy? Well, nothing is easy worth having. Is it going to be worth it? Absolutely. What I would encourage you to do tonight that came on board, is get with the person that brought you out tonight to this Zoom call or invited you to this Zoom call and just explore the possibilities, whether it be coming on board and learning this and showing other people how to find where the money is, whether it be getting your own financial house in tight order. Let's explore that possibility. Schedule a meeting with them. And those that came tonight, if you have any questions, reach out to Bessie Cooper Harris, the other regional vice president, reach out to me. and anyone that we have on our team, and we'll be glad to address whatever your concern might be. Hey, look, thank y'all for coming in tonight and showing up. Have a great rest of the night. And we'll see you again on our next meeting, which will probably be in about 2 more weeks, but we'll let you know, let the team know, and they'll put it out there and post it. Y'all take care.